Hello everyone, appreciate you watching this video. I've made a couple videos so far. This is my third. I want to give a shout out to Rich for asking some questions in the comments of the last video, and want to take some time and maybe answer a couple of those questions. And one of the first questions that he had was what is that criteria for selecting stocks for a cash secured put? Where to find the best premiums, and how to use delta in risk analysis. And so, just jump right into it here. In terms of stocks for consideration, there's obviously definitely many different ways to consider stocks for selling put options. I would say, do a lot of research, maybe, go to different websites, watch different YouTube channels, see how other people do it. That's what I did, just looking at a lot of different information. One of the websites that I was guided to was financecharts.com, and basically, if you go to that website, you'll see here that they have undervalued stocks for September. It's updated as of September 15th, and basically what they've done is, let me take myself out of this. What you'll see is, let's say Alphabet or Google, the close price as of Friday was $137.40. Fair price, they're saying, is based on their calculations, is $345. So definitely valued a lot lower than what they believe the fair price is. United Health Group, 486. They're valuing it at 1,800. And there's a big list, a lot of companies you may recognize. American Express, they're saying is undervalued. So a lot of these, they're saying, have a potential for growth in the company as well as the stock. And so that may be a place to start. Another one is the option screener. All right, so on this website here, what you'll see is, you'll get to this. It's a free website. You'll see that without having a subscription, whether it's a paid subscription, you could look into that. I use it mainly as guidance. So, for example, here in the option spreads, let's say I want to look at stocks with a $25 to a max stock volume. I want 100 or a million trades. For the stock, I want a lot of volume. I want a lot of interest in the options. Make sure there's liquidity, so when I'm ready to buy or to sell, or open or close. And then in terms of in the money, I want it to be in the money. We're selling a put, so I want the action going in the negative direction in terms of the put direction. And expiration, let's just say we want we're in September, let's say November. And so this is some of the criteria that I will put in just to get some ideas for stocks. So this doesn't necessarily mean that this is what I'm going to use exactly, but if I come down here and say, okay, in order to get, maybe what we find is that to get the best premiums, it's typically going to be when you have the highest volatility in the underlying stock. So if I sort this based on the highest volatility, you can see this. If I multiply this by 100, it's 121% volatility and going down. And then here it has an estimated ROI. So you'll find, some stocks here. Arlington Asset, I'm not familiar with that. Carvana, that's a familiar stock. Looks like it's trading at about 41.20. So if I make a note here, Carvana. Let's see, what else do I recognize? Let's say Coin, that's going to be Coinbase, right? So it's basically what it's going to do is just kind of guide me towards some stocks. You could, of course, can dive into this, dissect it, look at, understand it, play with it. You can sort in different ways. I'm not going to go into the details of that. But if I take those two lists, basically I've taken the list, I've added a few other stocks in here that are not part of that, the undervalued stock. So you can see I kind of build an interest, stocks of interest, you would say, and then let's say like Meta and Home Depot, Charter, a lot of different, Apple, Tesla. One thing you're going to see is that when you sell puts, it's going to be based on how much collateral you have to be able to open that option if you're selling options. So for myself, I'm trading on Robinhood, and you'll see that on Robinhood I have a total cash available is $11,700 currently. But so you'll see that, if I wanted to do a Home Depot selling a put, I would need to have $33,000 just to do one contract, plus or minus, depending on where the stock is and what the put strike price is that I choose. But in the ballpark, that's going to be where I'm at. So selecting stocks, I mean, there's a lot more stocks out there that are below my price range. So this definitely is not the list that I would say, hey, focus on these. Create your own list. Do your research. Figure out the companies that you feel you want to invest in. I know Intel this last month has increased in price and has a good trajectory. I know when I'm selling put options, I've learned that I want it to be steadily increasing in value. Or trading sideways with some volatility. And so when you're doing research on stocks, there's a lot of different tools, a lot of different stock screener, option screeners, stock screeners, a lot of different things that you can use. Another thing that I use is I actually, let's say for example, we looked at CVNA, right? So Carvana. So if I go to Carvana and I say, okay, what does it look like? All right. So if I go on a 3-month and I say, okay, it looks like, if I use this tool here, I would say there's maybe some good support there at 36.34. Looks like it's currently, well, I'll use Robinhood for other information, but there's support at 36.34 long term, 3 months. If I go to 1 month, is there any obvious support? So let's see. In the 1 month, maybe, looks like there's a couple of points there. Let's say 46.35. And let's go to the 10-day and see if it's developing, if there's any support there. Maybe nothing so clear. Let's see. Oh, here we go. Let's see what it looks like. Well, looks like there's some point. Looks like it crushed below the support and then passed through it, came back. So maybe that's a fair value. 48. I would probably look at the 48 as a strike. So going back to Robinhood, and let's go to Carvana. If I go to trade options and I go to sell put, and I'll look at the 4-day. Let's say if it's expiring on Friday, I was saying maybe a 48. If I go down to the 48, let's see, sell put 4 days, 48. The delta's a 0.22. Okay, that's something to consider. So what I'll do is I'll say, okay, based on that, let's take a look. Let's put Carvana here. Dividends date or earnings date is that one that potentially could have an earnings date coming up. So let's take a look. I'm going to put here, I use E-Trade for some data, some analysis, fundamentals. Let's see. I'll put Carvana there, and we can see that if I do, in terms of the dividend, next earning date is November 2nd. I don't see dividends. So earnings date 11/2. So I don't see dividends. Again, I'm going through this quickly. I'm doing it for the sake of the video. Haven't looked at Carvana before. What is the share price? That's going to be when you open the trade. So If I go back to Robinhood and I looked at Carvana's currently trading 51.51. I'm looking at it pre-market the night before. So 52.51 strike price. We were looking at 48, which is about an 8% difference from the current share price. Delta 0.22 with a 110%. So 0.22 with a 110%. And for the purposes of what we're looking at, I would say, is it a red day? Don't know, not really. We'll find out in the morning. If it hits negative territory, then this would be a yes in the morning. If it drops, share price estimated bottom, I said a 46.5 is probably a good bottom. I had a 46.35. Let's just call it 46.5. The limit price for the option looks like it's 0.83. And we know the expiration is September 22nd. And one contract. So it looks like an $83 minimum credit. Cost basis is $4,800 with an ROI of 1.73. Assuming the stock were to fall to the estimated bottom, which would be an 11% drop of the stock price, and that's pretty significant. Volatility is pretty high, though, 110%. It's above the 50, but that doesn't mean that it's not a good trade to get into, or an option to get into. But so if it did fall to this bottom, it would pass through the stripe. It would fall maybe 1.5 points, which would be times 100 is $150, which you got an $83 credit. So if you sold the stock as soon as it crossed over the strike, somebody exercised their option, and you sold the stock immediately, yeah, you would see a $67 loss at that point. But the purpose is not to sell the stock. You now own the shares. You would have paid $4,800 at a price of $48 per share, which is an 8% discount to where it's currently trading now. And then once you do that, you can go into a covered call and enter into the wheel strategy, where then you sell call options to a strike price above the 46.5 if that's where it falls. Ideally, you want, in the perfect world, if it fell to a strike price of 48, and then you got your premium, you enter into the wheel strategy in terms of the selling the call option. You would then at that point make income selling the call option until you were if it increased above the strike price of the call option, then you would experience the premium plus the profit from the stock increasing in value. In terms of delta, here we have a delta of 0.2, and you see I have a criteria of less than 0.3. And when we're looking at delta, basically what we're looking at, from what I've learned on the internet, looking at different websites, looking at different YouTube videos, it's the change in option price relative to a $1 move in the underlying, in this case, stock price, because we're looking at stocks. So, for example, if the delta is a 0.2, then we're going to see a 0.2 change in the option price for every dollar that the stock moves. A delta of 0.2. If you're buying buying options, like you're buying a call or buying a put, then you want the delta to be higher than a 0.4, let's say, for example. Because what delta is, not only does it tell you the change in the option price relative to a $1 move in the stock price, but it's also a measure of the probability of that option going into the money. Meaning, if you have a delta of 0.2, if you're buying the call, then you have a 20% chance of that stock crossing that strike price, so you can exercise the option or make a profit. Now, in terms of buying an option, it may or may not be, depending on what your motive is for buying that call or put option at a 20%. But when I'm selling options, I want to uh, be less than a point 0.3. The lower I am, you'll see here, if I were to say, oh, look at, I want to be really, really, really safe. I want to go way down. All right, I want to go way down here because it's real safe. Wow, 5%. There's a 93% chance I'm going to be, I'm going to get the premium without having to exercise the option or them calling me on that. But at that point, your premium's going to be a lot less than what the option's worth, for example. So the more aggressive you are, the more opportunity for premium. So, but also vice versa as well. So being, for me, I think anywhere from a 15% to a 30%. I think I'm targeting more of the 20% just starting out, just being a little more conservative. I want the probability more in my favor. I'm willing to sacrifice a few dollars in premium for that. And you can see here that if you have a delta of 0.2, in this case, let's say the stock we were looking at is trading at 52.51, and we have a 0.2, the option starting price. Going back to this, oh, there it is, 0.2. And so you can see that the final stock price, you got the final option price of 0.4. And so as the stock value, in this case, were to increase, the final option price in terms of a put, we're looking at a put, so we're with the calls, we're going in the upward direction, and the put, we're going in the downward direction. And so, the final option price at this point would be a 0.4, which would be a $20. We would see a $20 increase. If we were buying the put, we would see a $20 profit in terms of it going down $1. But in terms of selling options, this is really what we're looking at, or what I'm looking at in terms of delta, is the probability of the option going into the money, and that corresponds pretty well with what the chance of profit being 78%. That's 22%. 100 minus 22 is about 78%. So you can see Robinhood kind of does the calculation for you. So let me turn this back on. So anyways, as we're looking at this, I hope that gave you some information, a little more details on kind of the process that I use. Of course, I went through that quickly. I'd probably spend a little more time if I'm alone without doing a YouTube video to do a little more research, maybe do a little more on the fundamentals of the company I'm going to invest in. Make sure there's no news or things out there that are going to cause the stock to maybe drop tomorrow. Maybe they got a new CEO, they're laying off people. There's so many things that can affect the stock. So take the time, look into the stocks that you're looking at. One thing I will share before I do go is that I do have a few options that I've done a cash secured put. I've opened and I've closed, and I've got some premiums, and so I'm pretty excited about that. I do have Intel open. I opened that on the 13th, and it's scheduled to expire this week. I'm still in the green, so I'm hoping to collect all that premium if I choose to close it before. You can see that I can choose to buy the option to close it, at which point I'll put what I paid to do that, and then I'll have the actual premium. So my target right now, because I've started this in September, I got about 4 months. My target right now is about a 12% average. So if I make $115 per month just starting out at a 12% rate of return, I'll feel like I've hit my target. And if I, as we go, I'll change that and increase it, decrease it, depending on how I'm doing, and hopefully be able to get a track record that shows kind of what my history is. But until then, I hope you enjoyed that. I look forward to the next time. If you have any comments, you want anything you're interested in that what I'm doing, if I don't know the answer, maybe I can do some research, tell you what I found. So hopefully you have a good week in trading, success, and lots of wealth to you. Thank you very much. Bye-bye.